Well, dairy farmers wouldn't have been living under a rock if they'd been following the global dairy trade auction of last week. That's showing a 7-year high. The strong demand from China on whole milk powder prices are driving it, boding well for an even stronger payout this season. This is the 7th consecutive time, completely outrunning previous market expectations. And we're joined now by the wonderful Rabobank's dairy analyst Emma Higgins to explain more around this. And as farmers will want to know, how sustainable is this, Emma?
Yeah, absolutely. Look, it's the $1 million question, right? Look, first things first, it has been, as you've said, a really great run for dairy commodity prices over the course of this year. And I think farmers need to certainly take stock of that and enjoy the good times while they're here, because certainly for this season, we are expecting to see a very strong milk price. And in fact, we will be upgrading our current forecast, which is $7 at the moment. And we will certainly be lifting that more in line with Fonterra's top end of the range as we progress through the coming weeks. But look, it is a really good result, and it comes down to the fact that we have seen very strong demand out of China. And it is pleasing because we have seen, obviously, Chinese New Year period happen. And normally we may see a little bit of weakness in terms of the GDT results come through because of the holiday period there. But certainly that wasn't the case based on the GDT that we just saw. And I think there's a couple of factors underpinning really the strong demand. The first is that we've seen, a weaker US dollar. So that's important because it means that the purchasing power of countries that are looking to import dairy commodities is in their favour. So we've seen in particular with China, the price of local milk really be at a premium compared to the imported product, which comes from New Zealand. So that's one of the factors there. And the other thing is just really what's happening within China. There's a lot of dynamics there that are at play with high feed costs and a milk pool that's really targeted towards the liquid milk side of things. So it's all, in summary, great news for New Zealand farmers for this season.
I mean, the eyes are on that peak of an $8.40 milk price in April 2014. They're talking a second highest Fonterra payout in 20 years, potentially. You're saying sort of rising your forecast, but are we going to crack that 8, do you think?
Look, I'm not quite confident to say that we will crack the 8, but I do think there is certainly some upside from Fonterra's midpoint where it sits at $7.20. What happened with, the $8 plus milk price was that commodity prices were a lot higher than what we're seeing now. At the moment, we've got a whole milk powder price of, US $3,600 per tonne, which is excellent. Back then in 2013-14, we were seeing commodity prices across the whole complex around that $5,000, $6,000 US dollars per tonne. So there's a little bit of a difference there coming through. But I do think, nonetheless, it is an excellent result for farmers with revised forecasts upwards. But there's a number of factors that we're watching for perhaps the following season, the upcoming 2021-22 season.
What about other emerging markets, the likes of Africa, etc.? Is there any other global trends other than China that's underpinning these commodity prices?
Yeah, we do talk a lot about China, and there is good reason for that because they are certainly the heavy hitters when it comes to buying off the GDT, and we know that that's how the milk price is basically constructed, is from the GDT prices. But outside of China, there is certainly a pickup in demand from generally across the board. You mentioned the Middle East, and we have seen that come through in certain specific commodities recently around the fat side of things. But what we're actually seeing is strong demand out of Southeast Asia as well for powders. And that's really interesting because what we tend to see at these commodity price levels is Southeast Asia tend to stand back a little bit when we're reaching these kind of thresholds. So it's great to see, particularly in the last GDT event, that there was strong buying activity from Southeast Asia.
What about with the vaccination rollout across many parts of the world? Will that have a flow-on effect to a pickup in food service?
Yeah, look, that's something that we're watching really closely because we know that the food service industry, certainly, the restaurants, the bars, the cafes have all been hammered by continual lockdowns overseas. And so, we're expecting improved confidence as the vaccination program rolls out. We think some of that will come through into the second half of this year rather than this first half, just because of the time delays. And it will take a little bit longer, I think, for confidence to resume, generally speaking. One thing that we are cautious about, and sorry, we are bringing this back to China, but it's just China is certainly our test case, I guess, for how the food service industry is performing. They went into lockdown first, and so we are watching their food service data. And what we have been a little bit concerned about is the trajectory of their recovery has actually started to slow down for the data that we've received for the end of 2020. And we know that with Chinese New Year, there were some restrictions in place around movements, or certainly strong incentive to stay at home just around some outbreaks in certain regions in China. So that's a note of caution that we are cautiously optimistic around the recovery of food service, but we do think it's got a little bit to go to reach those pre-COVID levels.
Thank you so much. Senior Dairy Analyst for Rabobank, Emma Higgins, joining us in there to put some context behind the numbers when it comes to a very rapidly rising GDT and, of course, the flow-on effect to what the milk price will look like going into next season.